Good morning, students. How are you all? Hope you all are fine in your houses. I am also fine, students. Okay, today shall we learn how to prepare journal entries? Yesterday I have given some examples for you how to prepare a journal entry for a transaction. So first we should analyze the transaction. First step what we have to do, we have to analyze the two accounts involved in that transaction, two accounts. Then you have to that we have to locate which account it relates to. That means whether it is related to the personal account, real account, or nominal account, we have to identify. Then we should apply the rule. Here two accounts are there, which account should be debited. If it is personal account, we have to say the rule first: debit the receiver, credit the giver. So whether that person is the receiver or giver, then we have to conclude that account should be either debited or credited. Then the next account we should see it relates to which account. If it is a real account, then we should apply the rule. Okay, we should say the rule. For real account, what is the rule? Debit what comes in and credit what goes out. So whether that account is whether that asset is coming inside or going outside, we have to check. Okay, that's all we should do. Then we should write the entry, journal entry. Okay, this one we have to do in rough, and the last one we have to write in the notebook. Okay, that way we have to do. So I will show you the transactions. Around 10 transactions are given. Now we will prepare the journal entries for them. Okay, first we will read the illustration. Okay, J. Seeley is a sole proprietor having a provision store. Following are the transactions due to the month of January 2018. Journalize them. First one, commenced business with cash. Okay, commenced business with cash. Then deposited cash with the bank. Then purchased goods by paying cash. Amount is given here. Then the other transactions: purchased goods from Lipton and Co. on credit, sold goods to Joy and received cash, paid salaries by cash, paid Lipton and Co. by check for the purchases made on 4th Jan. Okay, so the first one we will see now. Okay, what is the first? Commenced business with cash. So here for the first one is cash account, isn't it? Then the commenced business, I told you, the proprietor is bringing cash. So that one is related to personal account. We should write here J. Seeley. J. Seeley, she brings amount, investment, commenced business, that is called capital. Okay, so it is this one personal account, this one real account. What is the rule for real account? Debit what comes in, credit what goes out. Here we have to see from the viewpoint of the business. For the business, the cash is comes in, so we should debit. Here the personal account, what is the rule for personal account? Debit the receiver, credit the giver. He is giving the cash, so we should credit. So what is the entry? You see, cash account debtor. You see that how it is written. Okay, first number you want to write, then heading. In the books of J. Seeley, then journal entries, we have to use only one page only. Okay, one page, two amount column, debit and credit. One small column will be their LF. Then particulars column will be little longer. Then date, the first column. Okay, you have to write everything. You see, beginning first it is written year, then month, then date. There in the notebook one small line will be given. So afterwards we can write only the date, not the month and year. So first entry, cash account debtor to J. Seeley's capital account. J. Seeley commenced business with cash, amount we have to write. Then the second one, deposited cash with the bank. Okay, deposited cash with bank. Here what are the two accounts involved? One cash, isn't it? Then the other one bank. Here cash is real account, bank is personal account. Isn't it? Here debit what comes in, credit what goes out. You understand the meaning. Deposited cash with the bank. So the cash is going out. Isn't it? So we should credit. Here bank personal account. Debit the receiver, credit the giver. The bank is receiving. So we should debit. Okay. Now you see the journal entry. Bank account debtor to cash account. Deposited cash into bank. Write the amount like this. Then third one, purchased goods by paying cash. Okay, purchased goods by paying cash. Here, purchased goods, it is considered as purchases. Sold goods, sales. Okay, then another one, cash, to account. Okay, here this one purchases, in both the sense we can take either real account or nominal account. Nominal account means it is an expense, so we should debit. If we take it as a real account, debit what comes in. So again the same, even if you consider the purchases as real account and nominal account, both will be same only. Okay, then the cash, by paying cash, cash is going out, so we should credit. So what is the entry? Purchases account debtor to cash account. See, purchases account debtor to cash account, bracket goods purchased by cash. Then fourth one, purchased goods from Lipton and Co on credit. Purchased goods from Lipton and Co on credit. Okay, here purchased goods we know, purchases, isn't it? Here on credit, so we cannot take cash, credit transaction, so we should consider the person one who gives. Okay, this is this account, Lipton and Co account and purchases. Purchases, we are purchasing, it is an expense, we have to debit. Always purchases debit only. Okay. Then from Lipton and Co for personal account, credit the giver. He is giving, so we should credit. So purchases account debtor to Lipton and Co account, since it is on credit. For cash, purchases account debtor to cash. Okay, instead of cash, we should write the person from whom we are purchasing. Okay, that's all. So purchases account debtor to Lipton and Co account. Okay, goods purchased on credit. Then fifth one, sold goods to Joy and received cash. Sold goods to Joy and received cash. We are receiving cash, so cash one. Another one, we are selling goods. Here Joy we should not write because we are receiving cash. So cash coming and cash real account. What is the rule? Debit what comes in, credit what goes out. Here cash is coming in, so we should debit. Here sold goods, I told you it is called sales. So what is the entry? Cash account debtor to sales account. See, cash account debtor to sales account. Cash sales made. Okay. Then sixth one, paid salaries by cash. Paid salaries by cash. Here salary, this is nominal account, this one real account. Okay, nominal, debit all expense, it is an expense, so we should debit. Here we are debit what comes in, no, it goes out, isn't it? So we should credit. Cash is going out, we have to credit. So what is the entry? Salaries account debtor to cash account. Salaries account debtor to cash account. Then 7. Paid Lipton and Co. by check. Paid Lipton and Co. by check. By check we are paying for the purchase made on 4th Jan. So 4th Jan it is 10,000. For the amount we should refer that one. Okay. Okay, so here one is check. Check means here who will pay? That one, the bank. Okay, so bank is the account. Here Lipton and Co. So here personal account. Debit the receiver. Here he is receiving, so we should debit. Here by check. Who will pay that? This one also bank account, also personal account. Credit the giver. The bank only has to give. Giver, so we should credit. So Lipton and Co. account debtor to bank account. See, Lipton and Co. account debtor to bank account. Then 8th, bought furniture by cash. Okay, bought furniture by cash. So one cash account, another one furniture account, isn't it? So don't write here purchases. Okay, furniture asset, if we purchase, we should write only that asset's name. Okay, so but furniture account, cash account, both real account. Okay, debit what comes in, credit what goes out. What is coming in? Furniture in, so we should debit. Cash going out, so we need to credit. So furniture account debtor to cash account. Furniture account debtor to cash account. Furniture bought for cash. Then paid electricity charges by cash. Paid electricity charges by cash. So one account, cash account. Then here this electric charges, it is the expense name. So expense should be debited. Cash is going out, so it should be credited. So electricity charges account debtor to cash account. Okay, electricity charges paid. The last one, bank paid insurance premium as per standing instruction. Sometime for the business, the bankers will pay some expense or they may receive some income also. For that, the business or the customers of bank will give some instruction. That is called the standing instruction. Okay. So here bank paid the insurance premium. So insurance premium is the, I will write the transaction. Bank paid insurance premium. Okay, here bank is paying. Okay, another one, expense name insurance premium. Expense should be debited. The giver is the bank, so we should credit. Insurance premium account debtor to bank. Insurance premium account debtor to bank. Insurance premium paid. I think you might have understood this one, isn't it? Now we will see the 7th one also. You cannot see the amount column. Okay. Okay. 7. Anand is a trader dealing in textiles. For the following transactions, prepare journal entry. Okay. Commenced business with cash. That we have already learned in the first one. Here cash account, then capital account. Anand's capital. So cash account debtor to Anand's capital account. Anand commenced business. That's all. Then purchased goods from X and Co. on credit. So purchased goods means purchases. Purchases account debtor to X and Co. account. See. Purchases account debtor to X and Co. account. Okay. Then cash deposited into bank. Here cash is going outside, bank is receiving. So bank should be debited, cash should be credited. Okay, bank account debtor to cash account. Then bought a building from L and Co. on credit. Here building we are purchasing, should not write purchases. Purchased goods alone we should write purchases. Okay, if an asset we purchase, we should write that asset name only. So building only coming inside. And on credit we are not paying cash, so the giver is L and Co, so we should credit L and Co. Okay, building account debtor to L and Co account, building bought on credit. Then cash withdrawn from bank for office use. Here cash we are withdrawing from the bank. Okay, so cash and bank, both the accounts, here cash is coming inside, bank is the giver, so the cash account debtor to bank account, cash withdrawn from bank for office use. You see another one, cash withdrawn from bank for personal use of Anand. Here cash withdrawn from bank for personal use, here this one only we should underline, personal use. If we withdraw money for personal use, that is considered as drawings. We have studied in the first lesson itself. Okay, so it is called drawings. So drawings account debtor to bank, there cash will not come. Okay, if it is for office use, cash account debtor to bank. But if it is for personal use, instead of cash, we should write drawings account debtor to bank account. Then towels given as charities. Okay, here he is running a textile shop. Okay, that is his goods. That only he has purchased and kept. That one only he is giving for charity. For okay, so that expense we can consider as that is the expense. Okay, charity is the expense. And that towels, this towels means from the purchases only he is giving, so the purchases will be getting reduced. Okay, so charities account debtor to purchases we should write, there we should not write towel. Okay, charities account debtor to purchases account. You see, in the same thing way, shirts taken over by Anand for personal use. So here for personal use means we should debit drawings account only. Okay, drawings, then shirt taken, that means that is his goods, his purchases he is using, so that should be credited. Okay, drawings account debtor to purchases account. Okay, drawings account debtor to purchases account. Then sarees distributed as free samples. Here we can write either free sample means like for sales promotion. Okay, like sales promotion activities only we give something as free sample. Okay, so we can write sales promotion account debtor to purchases. All these things he has purchased and kept for sale. Okay, so purchases should be credited. This one, free samples, we can consider it as sales promotion. Here goods are which goods? Tablecloths used for office use. So we are taking this one for office use, so we know this purchases we can credit, but what should be debited? Office expenses. Okay, so it is taken as office use, so we can write it as office expenses account debtor to purchases account. Okay, so just you see that to entries. First one, sales promotion account debtor to purchases, then bracket goods distributed as free samples, then office expenses account debtor to purchases, goods used for office use. Okay, these two we have completed, and the exercise from 7 onwards they have given for us. Okay, that up to 6 it is deleted portion, so I will not teach you. The other I will teach for you. Okay, so in the tomorrow's class we will learn that one. I will teach you the exercise. Okay, students. Okay, thank you very much.